Hey, what's up, stock compounders? Brad here. So Mohnish Pabrai has released another Q&A session, this time with the Kolkata Value Hunters Club. Okay, this was recorded on May 12th, 2021, just released a few days ago on May 27th. So I want to share my highlights from this latest interview / Q&A session with Mohnish Pabrai, just to really drill these lessons into my head. As Pabrai has started every Q&A session, he gets a little bit into his shifting framework in terms of, buying dollar bills for 50 cents over the first, maybe 20 years of Pabrai funds to the last year, which is switching over to buying these 100 baggers or these long-term compounders. And it's interesting. He says the first 5 years of investing being inspired by Warren Buffett, Pabrai really was looking for these rapidly growing businesses with high returns on equity. Okay, so it's kind of what he's getting back to after 2 decades of buying the discounted pies. And again, that was of course inspired by reading Nick Sleep. But he gets into an even more compelling, investment team in this video, in this Q&A session, than Nick Sleep's Nomad Partnerships, and that's Naspers. We're going to talk a little bit about Naspers towards the end. It's a really interesting story. But I just want to share a few more highlights. Before we get to that, of course, he talks about scaled economies, shared businesses, which is really what Nick Sleep and Case Zakaria discovered through their research at Nomad Investment Partnership. They really focused on those types of businesses, scaled economies shared, when as a business grows, it passes on the benefits of that scale to customers. Okay, it doesn't just keep the rewards for itself. Pabrai in this talk mentioned Visa and MasterCard and how, there's a lot of scale economy benefits that accrue to Visa and MasterCard, but they don't really share those benefits with the customers. They kind of keep those for themselves, and they're great businesses, but it would perhaps be even more compelling if they actually shared those benefits with customers. Of course, there's pretty incredible moats around those businesses. So, we haven't seen competitors come in and really knock them off. Of course, we are entering this age of, social finance. For example, SoFi just went public through one of Chamath's SPACs. It seems to be an industry poised for disruption. Okay. Perhaps these businesses are going to be easier to disrupt, Visa and MasterCard, because they haven't shared those benefits with customers. We'll find out what happens as that movie plays out. The real kind of point here with Nick Sleep and Case Zakaria is you can do very well as an investor by only focusing on this very narrow business model, right? The scale economy shared business model. And it really, for me, it reminds me to focus, okay? And you really can't be too focused in some sense. Pabrai has talked about this many times, how he's got this friend who focuses only on commercial real estate within a couple mile radius of Stanford's campus in Palo Alto. It's not how narrow your circle of competence is. It doesn't really matter. It's all about staying within that circle of competence. So many people think, I need to expand, right? I need to expand my circle of competence to do well, but that's not necessarily the case. Talks a bit about Races, how the market cap was 19 million when Pabrai bought, with a liquidation value of 300 million to $1 billion. Okay, so just a huge delta between what he was able to buy in at and what he thought the underlying value of those assets were. And currently, Races is around 120 million market cap. So it's up about 5 or 6x from where Pabrai was buying in 2019. Potentially still 3x to 10x from where it is now, compared to liquidation value. So again, I wish I had access to the Turkish market, but I haven't figured that out yet. Let's see, he talked about Rain Industries. So this is the most I've heard him talk about Rain, his investment in this Indian cement manufacturer, at around 30 minutes. So if you guys want to dig into Rain a little bit, I'll link to this talk. Around 30 minutes is when he talks about Rain Industries. I'm not going to go into that really because I don't have access to Rain. And it's a pretty nuanced discussion around Rain, but it's also a very interesting discussion in terms of how Rain was able to limit the downside. Okay, structure these acquisitions in a way that if they didn't work out, it really wouldn't hurt Rain Industries, the business. So that was interesting. Talks about how a large inheritance to your kids and grandkids is probably a disservice to them. He's talked about that before. And, I'm curious how Charlie Munger would address that question, because it seems like Charlie has been much more open to passing on that wealth to his family, whereas Buffett and Pabrai are more on the side of, we need to return this money to society, through philanthropic efforts. So I don't know if any of you have heard about Charlie Munger talk about this idea of passing on wealth to family members. Curious about his take on that. He talks about Indian hotels, which is a business in India. He says, with all due respect to Indian hotels, it's the poster child of horrible capital allocation. I thought that was funny. And he kind of goes into some examples about why he thinks that's the case. So let's get into Naspers. Oh, Pabrai. So he talked about how often he's going to do talks, which is really exciting. He said, he's open to doing about 2 talks a month, these Q&As at business schools and for other organizations. So that's pretty exciting. In previous years, probably starting in around 2015, 2016, is when I kind of started watching Pabrai. He was only doing 2 or 3 talks a year. So it sounds like we can expect like 24 talks out of Pabrai in 2021, which is fantastic. Very excited about that. He talked briefly about Seritage as being in the funeral services business. Funeral services being a metaphor for companies that are in the rebirthing business, or kind of bringing assets or companies back from the dead. So Seritage is in the rebirth business, converting old Sears buildings into new uses, right? Multifamily, mixed use, bringing these old boxes back to life. So that was an interesting way of framing Seritage. So let's talk now about Naspers. So there's this company in South Africa, a 106-year-old newspaper publishing company, okay? Out of, I believe it's Cape Town, South Africa. So in 2001, Naspers invested $32 million into a Chinese company called Tencent, all right? There was a 43% stake in Tencent that was made by Naspers. That Tencent position, if we go into ticker terminal, is around $222 billion, okay, from 32 million to 222 billion over about 20 years, 2 decades. So That's about a 7,000x, all right, a 7,000 bagger over 2 decades. So Pabrai, he talks a lot about Nick Sleep and Amazon's position, how Amazon really moved the needle for Nomad Investment Partnership. When Nomad started buying into Amazon, it was probably somewhere around $35 per share, okay, mid $30 per share. I think it was in 2005 or so is when they started buying into Amazon. So, over those 16 years, Amazon has done incredibly well. It's like a 100 bagger, just shy of a 100 bagger over those 16 years, okay? Compare that to what Naspers was able to do with Tencent, a 7,000 bagger over 20 years, okay? So, it blows it out of the water in terms of the returns that Naspers is able to generate from their position in Tencent. And Pabrai talks about how, it must have been incredibly difficult for Naspers to hold that position for 20 years, okay? They must have gotten a lot of regulatory pressure to sell off some of that Tencent position because, the fund had just become so concentrated, right? Naspers had become so concentrated in one position. And if you look at how big a chunk of, the South African stock market Naspers is, it's like 25% is the number that I heard, I think, from Pabrai because of Tencent, right? So it's such a lopsided chunk of the South African stock market, which has its own set of problems, right? For institutional investors in South Africa, they don't want such high exposure to one company, one position within, not just Naspers, but within Naspers. So it's really interesting that, you've got this huge delta, and I posted it on Twitter. Naspers has a market cap of $91 billion, while holding investments worth $315 billion, okay? If you add up all of these reported value of shares held within Naspers limited investments, it's about $315 billion. Now, if we go into Naspers, the company out of JSE, which is the South African Stock Exchange, and we convert this to USD, market cap $92.5 billion, okay? So there's that huge delta. So, you could look at that and say, well, this is a way to buy into Tencent at a steep discount, right? Pabrai said in this talk, he thinks Tencent is deeply valued at a 700 billion market cap, okay? So you've already got the deep value if you're going into Tencent directly. But if you're going to buy it through Naspers, right? I mean, what is that? I can't do the math in my head. 91 divided by 315, 29%. So you're getting a 71% discount. In addition to the discount, that Pabrai says is already there buying Tencent directly. It's an incredible margin of safety. Now, the issue with this is there's a reason there's this delta. There's this difference between the stock price of Naspers and the kind of net asset value of Naspers. And actually, Pabrai says the team at Naspers, right, the management team, they're spending a lot of their energy and attention trying to figure out how to close this delta between the price and the value of the investment portfolio within Naspers. It seems to be a fairly complex puzzle. So the question, if you're buying Naspers, that you have to ask yourself is, what is the catalyst that's going to close the gap between price and value for Naspers, or will this gap remain? There's a graph I saw, I think it's somewhere in this thread, and this is pretty. I've got a lot of interesting responses through this tweet of, what am I missing here? Why is there such a big delta? So if you're interested, kind of read through these responses. I don't know if I'm going to be able to find it right away, but there was a graph that showed how that delta has actually gotten greater and greater over time, over like the last 7 years or so, between price and value. So, I don't know what the catalyst is. So that's something I'd be asking myself. The team isn't about to liquidate the Tencent position because they see Tencent as still deeply undervalued at a 700 billion market cap. So they're probably not going to be liquidating that position to realize that value for shareholders. So, they did launch Prosus in 2019 out of Amsterdam. And it looks like that was an attempt to kind of close that gap between price and value. I'm just going to reset this feed here. But, you've just got to ask yourself, how is that value going to be unlocked if you're going to buy into Tencent through Naspers? And I've just started digging into that. I don't have any, incredible insights into that, but it's a really interesting story here, the whole Naspers situation. Anything else? Yeah, so Pabrai spent quite a bit of time looking at the capital allocators behind Naspers, and he saw pretty quickly it wasn't a fluke, that they hit this home run with Naspers. They're very intelligent investors, and they did this thing that was very, very difficult to do, to hold on to Tencent for 2 decades in the face of all of this pressure to do otherwise. And so the real lesson here from Naspers, from Nick Sleep, is you don't need to be right very often. It was really Amazon that moved the needle for Nick Sleep. It was really Tencent, obviously, that moved the needle for Naspers. What you need is extreme patience. Okay, you need to approach these investments as you're an owner of the business, and you're gonna ride it out. Okay, you're gonna allow the benefits of owning a great business accrue to you through the business, not by kind of moving chess pieces around every couple of years and taking on that active capital allocation yourself, but letting the great businesses do the compounding for you. That's really the takeaway from these 2 incredible examples in Nick Sleep and in Naspers. So let me know if you guys have any other great examples of funds that have hit home runs through extreme patience and through being able to identify these great businesses very early on in their lives. So I think I will leave it at that for this Q&A summary. But again, awesome that Pabrai is planning on doing 2 of these every month. I'm going to keep popping out these highlight videos from Pabrai's talks each couple of weeks. So keep an eye out for those guys. And with that, I will leave you all and see you in the next video. Take care.